The second tier envisions actors that may sometimes have access to price information, but maybe not necessarily always. And that would include financial institutions, trade financiers, and actors similarly situated. And the expectation there is that they should, when practicable, request, retain, and share as needed information relating to the price cap. And one thing that they would be able to rely on, and this is really key, is an attestation from their customer that the oil in which they're dealing was purchased at or below the cap if they don't have direct access themselves. And then the third tier of actors are those like insurers who really don't have ready and regular access to price information. And the idea there is that they would receive an attestation from their customers, from their insureds in particular, and to write that into the policies that they would provide. So, for example, as part of an annual insurance policy renewal process, they would include a provision requiring that their insureds only do business or flow down contractual clauses, ensuring that any oil that they're involved with, even if indirectly, is purchased at or below the cap. And that could cover the entire period of policy is in place and could be instituted in contracts as they're renewed. So our preliminary guidance, which we issued a couple of weeks ago, outlines that in a handy chart that we hope is helpful. And I just want to emphasize that the entire record-keeping and attestation process is really designed to create a safe harbor for service providers for liability from breach of the sanctions in cases where they might inadvertently deal in seaborne Russian oil that's purchased above the price cap due to falsified records or the efforts by bad actors to make misrepresentations to them. So, for example, where a service provider without direct access to price information reasonably relies on a customer's attestation, we're not going to hold that service provider liable for any sort of sanctions breaches if they acted in good faith because of those who made material misrepresentations to them.
Can I ask you a quick question about that? I had a case years ago, a bankruptcy case, where our client, a bank, had relied on a very short one-page financial statement and alleged that it was fraudulent. And Judge Blackshear in the bankruptcy court said, yes, indeed, it was fraudulent. In fact, it's so fraudulent you had no right to rely on it. So where does, I know this is preliminary guidance, but where does the line go to fall? What's an adequate attestation?
Sure. So there's not a specific form, and we realize that the attestation might not be a one-size-fits-all document across all segments of the maritime sector. Different players in the industry might be receiving these or might make these in accordance with what makes sense for them. That's something that's actually in development with respect to how that exactly is going to look. But I will say that, at the same time, it doesn't completely do away with the need to conduct regular due diligence. So, reasonable reliance on attestation would be something that is acquired in the normal course from a customer with whom they've had dealings in the past. That transaction matches similar transactions. There are no red flags of evasion and other due diligence practices that would normally be carried out continue to be carried out. So it's a reasonable reliance, as I think reliance typically is considered. You can't bury your head in the sand. At the same time, that attestation, they would not be required to conduct their own confirmation that the price was purchased at that level, for example, is the idea there.
Tell us a little bit what red flags you have in mind.
So we have red flags that we've talked about in a number of other prior guidance that OFAC has issued. In 2020, we issued a maritime advisory, and there the focus was really on Iran, on North Korea, Syria, and invasion that occurred through ships providing goods or services to those countries, from those countries. And a couple of the red flags that we identified there included things like turning off your AIS transponders, irregular voyages, clearly altered documentation, And it really depends on what sector of the industry you're talking about, which red flags you would be expected to consider. And the guidance actually goes into considerable detail with respect to that and breaks out specific best practices and specific red flags that are applicable across all the different subsectors. So insurers, charterers, ship owners, et cetera, each have their own section of the advisory where we point to red flags. And we think a lot of those red flags are going to be applicable here as well. And we're going to continue to provide additional red flags when we issue guidance. But I think that maybe in this context, specific red flags could be a reticence to provide price information at all, or some sort of unusually favorable payment terms that indicate perhaps inflated costs, insistence on opaque or circuitous payment methods. Maybe dealings with newly formed intermediaries or parties, especially in high-risk jurisdictions, abnormal shipping routes. You really know the industry better, but these are the things that we're thinking of, and they're actually the sort of things that we're here today, partly to hear from you about what we should be on the lookout for in terms of providing broader advice.
Michael? Bruce, may I?
Yeah. This is supposed to be a conversation, so people feel free to.
Right,
Yeah.
Bruce? Yeah. Are you anticipating, this industry is not monolithic.
You got a mic coming your way.
The industry is not monolithic. Is it your intention, is it the agency's intention to secure input and then issue further, more specific guidance on what is required? And if that's the case, what fora are you going to be getting additional information and intake from the industry? And then I have a follow-up question.
Thank you, yeah, and Eric here can speak to that as well, but we are actively engaging with many different participants in the industry. We did that on the front end of the preliminary guidance, and it's part of the reason why I'm here today, part of the reason I look forward to your questions. And we're having a series of conversations with different players in the industry that are relevant to the price cap mechanism and to how it functions. So I think that channels to provide feedback, certainly questions, feedback here today, but also through major trade associations. We're looking forward to speaking with ship owner associations and similar types of groups. We've already started to do that. We've spoken with traders. We've spoken with other major oil firms and the like. And so I think that through your association would be ideal, but certainly, if you don't feel like you have a ready channel, you can reach out to the organizers of this conference who we've been in touch with, and we'd be happy to try to organize a way to receive your feedback. And it's something that we are really actively interested in receiving, so please don't be shy.
So, Michael and Eric, come December, of course, the import of Russian Federation oil and refined products is already banned here.
Banned in the U.S.
And come December, it'll be banned throughout the EU. So we're talking about the flow of that oil to every other part of the world except the EU, right?
That's
the flag
right.
of the vessel doesn't matter. But the ownership of the vessel, this would not apply to a Brazilian owner of a Panamanian flag vessel, or would it?
Well, the prohibition on the services would apply to U.S. persons or to foreign persons that somehow cause a U.S. person to commit a violation of that prohibition. And that actually maybe takes me to kind of just describing quickly OFAC's jurisdiction, which does apply to U.S. persons in the United States and U.S. citizens wherever located, as well as some specific circumstances, foreign persons who, as I said, will cause, usually by misleading a U.S. person, to commit a violation. Broadly speaking, OFAC sanctions are strict liability. You don't have to have had reason to know. You don't have to have intended to violate the sanctions. The way we enforce that, though, is typically through a method that takes those sorts of things into account. And we don't go after people who have been misled and who acted in good faith and who are somehow tricked into committing a violation. So the application of the prohibition would be on the U.S. person and potentially, a foreign person.
And there will be a parallel provision coming out of the EU subsequent to the current tranche?
Similar, their ban would be on EU nationals. They don't have that sort of foreign causing element to their regime but that's the idea. The prohibition would be on EU service providers who would be insuring or chartering or somehow providing services to the trade.
Because if you look at their council regs and the jurisdiction of those, there's no causing it.
That's a distinction between the U.S. and EU regimes, broadly speaking, and applicable here as well.
Okay.
Yeah.
So, just on the causing liability question, if that Brazilian ship owner, say, knowingly carried oil that was above the price cap, and the payment was in U.S. dollars, and went through U.S., New York money center banks, who were then potentially exposed to liability, the Brazilian ship owner could be liable for causing that violation. Is that right?
That's correct. And we have a number of cases, if you're interested, sort of with that same fact pattern. In that fact pattern, we would not go after the U.S. person unless they really had reason to know somehow that the sanctions were being violated.
Okay.
Maybe, Eric, could you tell us a little bit about the compliance burdens that are upcoming? I know we're talking about December 5th and February 23rd, which are both really around the corner. And I expect you guys have a lot of getting up to speed to do as well. But what do members of this community, ship owning, ocean carriers, need to do from a compliance point of view to be ready?
Well, I think let me differentiate between the December and February dates from a kind of policy perspective, but then I might kick it back to Mike on compliance specifically, if that's all right. But the key difference, as many of you likely know, is that the services ban at part of the EU's 6 sanctions package applies to crude oil starting in December, but to refined products starting in February. The price cap is going to mirror that. Again, the key point here is we're thinking of the price cap as something of a release valve on the 6 sanctions package to encourage that oil to flow. So we'll see the crude oil price cap implemented at the same time in December as the 6 sanctions package, as we will with the refined product cap in February.
And just with respect to again, we are working to design a compliance regime that is going to impose a minimal additional burden on industry, because in keeping with the larger objective of allowing the oil to continue to flow. And so we want to construct something that works. And what we've hit upon is this attestation process where you can rely in good faith on your customer's claim to you, basically, that their dealing in that oil was purchased at or below the cap. The reliance on, you can rely on documents obtained in the normal course of business. We're not asking for, extra due diligence above and beyond what you would be conducting in the normal course. And then this, the receipt and the keeping of the attestation relevant records for a period of 5 years, we hope is not going to be an inordinate additional burden.
How will the cap be set? How are you going? If you have any indication about how and what will be the methodology of setting the cap?
So the process for setting the cap will be a consultative process among the G7 and the broader coalition of countries that sign on to the price cap, which right now includes Australia. So I can't get ahead of that specific process, but I think if you keep in mind the goals of what the price cap is intending to do, which is both incentivize Russia to sell oil under the cap, but also maintain a meaningful discount to market prices in terms of the revenues that Putin is receiving. I think the consultative process is likely to weigh those among other factors.
What is going to be? We are, just to be very practical, we are owners of ships carrying crude oil. So I'm very interested, and we are very keen on following sanctions, and we respect all that, and 100%. So let's say Chevron, for example, and it's an example which is very specific. Chevron orders us to take our ship to Novorossiysk and take a cargo of crude oil, and Chevron attests to the price. This is the price. How shall we as ship owners know that the price is up above or below the cap? We should know.
Well, the cap would be public.
Who is going, public in what way? Who is going to tell us? Is it the IMO? Is it, somebody needs to, on a website or somewhere, post on a daily basis or weekly basis that this is a cap applicable for that period of time. So we know that if our ship takes the vessel, and the ship, mind you, the ship is going to sail from, let's say, from wherever it is, 1 month ahead of time to go to the horses, take the cargo. At what time will the cap be, what cap, if it changes over time?
Yeah. The cap will certainly be publicized in advance of the implementation of the 6th sanctions package, but we can't give you a specific date until that consultative process proceeds. But it will certainly be publicized.
And I think readily available to all those in the sector. I don't think it will be hard to find. And certainly our approach to sanctions enforcement in general, it's not to play gotcha. I think it's been clear from my remarks. And if you look at our enforcement guidelines, that's not how we enforce the sanctions. And if you were to reasonably rely on, say, Chevron's attestation to you, if you weren't on the front lines of that purchase, that they purchased it at or below the cap, you're just carrying. You're a service provider in that circumstance, right? So there, you'd be able to, you would be a tier 2 or tier 3 service provider there, able to rely on Chevron's attestation, and they will certainly know what the price cap is. So,
is the price cap going to, the oil market changes every minute? Is the cap something that's going to fluctuate on a regular basis, daily basis, weekly basis? Just following up
it
on
will
his
certainly
question.
be subject to revision by the coalition of countries as market conditions evolve.
Just to clarify on OFAC versus EU on this. So if I understand it, as it stands now, if a Greek private owner is carrying Russian crude to India under the cap, then that would be fine for the UK insurance provider. But if the tanker owner was using, let's say, Greek commercial or technical services, that would be services provided out of an EU country. And as the EU sanctions stand right now, they don't have a cap there, right? So there's a conflict?
well, I think the idea is that they would adopt a cap similar to ours. And this has been announced at the G7 level, and I believe that the EU is working to implement this so that it's complementary and they mirror each other, and that you won't have that sort of situation. But
yeah, the cap is structured as an exception to the six sanctions package. So this will involve the reopening of that package pursuant to the G7 announcement. That's right.
Just to follow up on one of the earlier questions, it does take a ship, it could take a month to get to the port of pickup or the port of discharge. And the question then is, since the cap fluctuates for purposes of enforcement, at what point do you test whether there is compliance or not? Is it at the point of time at which the contract is made, or is it at the point of time at which delivery of the cargo is taken?
That's an interesting question. I think, Eric, certainly weigh in if you have thoughts. I mean, I think the idea is that the purchase price paid to Russia or the most immediate seller of that oil be at or below the cap at any point, and that carries on through the supply chain. So it's at the time of the purchase of the oil, I think, is how we would envision it. That the time that it's paid for, and if the cap were to shift in the meantime, we'd have to sort of look at sort of what the circumstances were there.
Yeah. So my question is, so if China is importing most of Russian crude oil today, so we're going to take an attestation from the Chinese national oil companies that they're observing a price cap that did they participate in setting? And then how are you going to keep, that whole thing, like with the ship owner, if it's not his fault, they lied on an attestation, are you saying to insurance companies you can't do anything? Because the insurance companies are currently pulling insurance right now for ships that are doing legal trade.
Well, an attestation from a Chinese customer would be, we would consider that a reasonable thing to rely on if there were no
But what's the recourse if they lie?
other red flags. Well, our enforcement is going to focus on that Chinese actor. And if we see evasion on a wide scale by bad actors in third countries that are continuing to import Russian oil, then I think we'll be taking a hard look at what we do. And there are different mechanisms for that. I mean, it's not just sanctions enforcement. There are other types of responses that can be taken. So I think we'll be looking at that. But what we would want to convey to you and to the maritime community writ large is that, if you are hoodwinked by a Chinese customer who's just flat out misleading you, and you have done your normal KYC and nothing else sort of stands out to suggest that, you really, we're just kind of putting your head in the sand, then we're providing a safe harbor, and that's not a term that we at OFAC use very loosely, but we are providing a safe harbor for participants in the maritime seaborne oil trade for these purchases under this policy.
Would the vessel owner have to show that they were legitimately within the safe harbor? Would they have to demonstrate compliance to policies, that sort of thing? How would it work?
Yeah, I mean, I think if there were a situation, I'm just going back to how we enforce our sanctions broadly speaking, I think if there were a situation where a ship owner were told one thing and it turns out that something else was happening, I think we'd take a good look at that situation. Again, the ship owner who's acting in good faith, the service provider who's acting in good faith, is not going to be the target of our enforcement efforts.
That was Mr. Bradley's
Awesome
phone.
ringtone.
That's a good one.
We would look at a range of factors. Was there reasons to know? Was it a willful violation? Were they trying to cover it up? Was the firm a sophisticated one that had the resources to conduct adequate due diligence and simply failed to do so? Was it a rogue employee? What was the size of the shipment? All the circumstances that sort of inform our sanctions enforcement response more broadly would be applicable here. And I just want to really just kind of emphasize that because our approach to enforcement is to enforce cases where we are really finding egregiousness, where we're finding willfulness, where we're finding some sort of industry practice that is at odds with the objectives of the sanctions regime, and we want to call attention to that. We're not playing gotcha for technical violations. And if you look at, you can't see our non-public actions, but I'll tell you today that they are, 95% resolved non-publicly, which means without a fine. And if you look at the sanctions, the enforcement actions that we have taken, which are on our website, you'll see that there's always some kind of, there's a real red flag there, there's recklessness, there's willfulness, there's some element of misconduct that we feel it's important to call out. And so, I think that the industry by and large really is focused very much on compliance. And we have engagements with them, and we see the investments that are being made. And so, we would look at it certainly through that lens and not be trying to go after, folks who are trying to abide by what is a very complex set of expectations and made more complex by this new price cap policy.
Just the one follow-up to the question is, how are you ensuring that there's an orderly, free market in terms of access to this discounted Russian oil? What's to prevent China from just going to Russia and say, I'll take all of it at the discounted price, and no one else gets any of it?
Yeah, so this is an important question that I think goes to our metric of success here, which is that, keep in mind the goals we started with of the process. If this oil is trading at meaningfully below market prices, then that is something that we see as a desired outcome. So we're not taking we don't have a strong preference up front where the specific discounted oil is going, as long as that oil is flowing and therefore keeping downward pressure on global markets.
Well, I certainly appreciate the question. I'm afraid I won't have an answer for you today. I think if you're repairing a ship, and there's no sort of proximate nexus to a Russian oil transaction, I'm not sure we would consider that the provision of services to facilitate the sale of Russian seaborne oil. If that ship is used exclusively for that purpose, maybe that's an interesting fact pattern. I can't really provide an answer to that today, but I would just say those sorts of questions are very much the ones that we want to hear, and I appreciate you raising it, and certainly if there are others like that, and it sounds like there are a million of them, we want to hear that because we want to be able to account for that and to be able to answer these sorts of questions either in the follow-up guidance that we're planning to issue or in the FAQs. And I will just say this too, since the invasion, we've issued well over 100 FAQs in response to the situation as it's evolved, including as a response to industry questions and concerns. And so this is going to be, very likely an iterative process, and we want to provide as much clarity and guidance as we can. So, those sorts of questions are very valuable.
Bruce, just one more, and that's it for me.
But Jovi's got a question.
You described, Eric, the price cap and this package that we're putting together as a relief valve, your words, for the six rounds of sanctions. But there's no equivalent to that in the U.S. We're not providing a relief valve to our sanctions because we're not prohibiting service providers, correct? So am I right about that?
We are.
We are.
And that's part of how the policy is going to be constructed. There is not currently a ban on the provision of services to facilitate Russian seaborne oil, but there will be under this policy.
Jovi?
Yeah, thanks, Bruce. Just recognizing, Mr. VanNostrand, recognizing, and maybe this is a question really for the economists, but recognizing the fungibility of oil.
Yep.
If the Chinese buy all of the Russian oil at below the target price, is there any way to prevent the Chinese then from reselling the oil at a hefty profit?
So the way we think about that, so that is an issue we're thinking about broadly. Keep in mind that the way we're thinking about these flows are ensuring that there are two goals, right? There are volumes on the market, and there are revenues to the Kremlin. And at the end of the day, those are the two variables we're focused on. One key point that I think has been overlooked in the past couple of weeks is we're already seeing evidence that just the threat of this policy is working in terms of driving Kremlin behavior, and that there's been a lot of reporting in the past couple months of Russia offering very steeply discounted long-term contracts to buyers in various parts of the emerging world in particular, sometimes explicitly for the consideration of not joining the price cap, but clearly due to fears of downward market pressure on prices. So those are the two metrics we're focused on.
In the back.
Thanks a lot. I was actually back to the sixth sanction package again for the Europeans. How much are you actually expecting that to open up again? Because as of now, from 5th of December, we're going to have a blockage on crude, and 5th February is going to be blockage on product. And basically, we will be allowed to take the oil out if it goes to third countries, but it's being very constrained by the P&I clubs. Also, there is sort of this extra remark that needs to be deemed strictly necessary. So there is a lot of stuff still preventing this, even we get the price cap in. So how much of the sixth sanction package are you hoping will actually be opened up? If you want the Russian oil to basically flow, because that is what you say the ambition is. And I can't see that working with the price cap alone.
Yeah, so what the G7 announced was an intention to implement this exception to the sixth sanctions package, which is to basically say the services ban still applies as in current law unless there is an attestation that the oil is traded below a certain price. So that's the edit that is currently being made in EU conversations to introduce that exception for oil traded below the price level. And that's the only piece that needs to change.
Okay, we have a couple more minutes. I'll throw one out there. You talked a little bit about what happens, or you replied, Mike, to a question about what happens if you were snookered by the shipper of the cargo, and which brings to mind issues of voluntary self-disclosure. And there's also in the preliminary guidance this notion if you encounter evasion or circumvention of sanctions, the obligation to reject and report, which seems to be in a similar vein. Maybe you could talk a little bit about that.
Sure, thank you, Bruce. So broadly speaking, we really would look to industry to provide us with indications of evasive activity. And when so we appreciate leads like that as a general matter. Let me just start with that. You mentioned voluntary disclosures. So many of our cases are the result of voluntary self-disclosures, and what incentivizes people to make a voluntary disclosure to OFAC is the very significant amount of mitigation that companies receive when they do so. If indeed, it comes to pass that a penalty remains the appropriate outcome for a case that's been voluntarily disclosed, the amount of the penalty is really a very small fraction of what it could otherwise be. And in many cases, again, cases that are voluntarily disclosed to us do not result in any penalty at all or any kind of other public action. And so there are a lot of reasons to self-disclose. And in particular here, we would welcome that because we want to understand efforts by bad actors to exploit this mechanism and to evade the price cap. So that's something that we encourage, broadly speaking, and I think would be especially valuable in this case. And I'm sorry, the second part of the question was
Reject and report.
Reject and report. Yeah, and so there's a distinction in how we expect folks in industry to deal with funds or property that comes into their possession, depending on the sanctions regime at play. When you're dealing with an actor that is blocked, so Bruce mentioned at the outset, it used to be simple, right? You just had to not do business with people on the list. The expectation is that if you come into possession of funds from them, you have to block that and segregate it out and just keep it to the side. And this is typically an issue for banks, really. And they have to put it in a separate interest-bearing account and just not touch it. Similarly for property, although it's a little bit more complicated when you're dealing with chattel or real property. And when we talk about reject as opposed to blocking in this context, and the distinction between, that's why we talk about rejection here. It's not that you have to block any property that would happen to come into your possession, but really you just have to not do the business. And alongside the obligation to block property is an obligation to report to OFAC that you have that property. So here, the obligation is simply to not do the business, but to report to OFAC the fact that you rejected that business. And that can come in a simple email. There are forms that banks have, but it's something that we want to know about, and so that's why that is written in there.
All right, I think we are out of time. So I'd like to thank Capital Link. I'd like to thank the panelists for this very interesting discussion, and I'm sure this is going to be a long-standing conversation. So thank you very much.
Thank you all.